Hello everybody, welcome to this weekend's chart analysis video, which is dated for the week ending the 3rd day of May 2013, and today is Sunday the 5th day of May. And within this video, we'll take a look at gold and silver, multiple time frames, as well as the gold to silver ratio. But I want to start this on with a play on words within economy, gold, and money. So without further ado, let's get started within that portion of the video. Okay. In economics, a depression is a sustained long-term downturn in economic activity in one or more economies. It is a more severe downturn than a recession, which is seen by some economics as part of the modern business cycle. So within this is from Wikipedia, depression economics, a sustained long-term downturn. Now, are we occurring this right now? I think it's an obvious yes. And it is part of the modern, which is now current, business cycle. So it's just something that has to happen when I read this, which I find very interesting. The next part of this on Wikipedia is considered by some economists to be a rare and extreme form of a recession. A depression is characterized by its length, by abnormally large increases in unemployment, falls in the availability of credit, often due to some kind of banking or financial crises, shrinking output as buyers dry up and suppliers cut back on production and investment. Large numbers of bankruptcies, including sovereign debt defaults, significantly reduced amounts of trade and commerce, especially international, as well as high volatile relative currency value fluctuations, most often due to devaluations, price deflation, financial crises, and bank failures are also common elements of a depression that are not normally a part of a recession. Now, what I found interesting within the Wikipedia article is they referred to previous times within a depression, but they do not talk about the current level to why it isn't in a depression, which is kind of interesting. But look at all of these different things going on. We're seeing a lot of them now. In fact, what about bail-ins? That's new stuff that's going on. Currency collapses. That's being played out right now as well. So, an economy is defined as a careful, thrifty management of resources, and depression is defined as being sad or dejected. So, is it safe to say how the human race manages resources is sad? Yes or no? Especially when you look at just how bad our food and pollution grows, let alone the GMO Monsanto deal. There's just so many reasons to say it's really pathetic, to say the least. Is it safe to say because of the economic model that many civilians are struggling and are very sad? Question, are they depressed due to the economy in large numbers? So, and I would say yes. So now let's go to a different kind of play on words now. Let's do two different sentences. Her word is as good as gold. He's got a heart of gold. Now, when you hear something say, oh, the word is as good as gold, or this is as good as gold, what you are referring to is saying that it is damn good. It is like, it's at the top of the chain pretty much. And they're using the word gold. Interesting enough. I guess if somebody's word was so bad, would you use the phrase, his or her word is as good as fiat currency? Maybe one day we may. And of course, he's got a heart of gold. There was a good song done about that. And anyway, next, I want to talk why nouns are important and why monopolies suck. Let's go through two different sentences again. Stanley went down to the grocery store to get some food and it cost him $60. Later, Stanley was hungry. He decided to eat and ate 4. Now in the first one, I can say this whole sentence and you know exactly what I'm saying. Stanley is a noun of a person, went down to the grocery store. Grocery store is another noun. To get some food. Okay, now we know what his intention, and it cost him 60. But 60 what? 60, yeah, when people talk about it, they'll just say the number and assume that people know what they're talking about. And they do. After all, there's only one way you trade in commerce, which is the monopoly, and that is fiat currency. Later, Stanley was hungry. He decided to eat and ate 4. Now, if he only ever ate one thing, if all you ate was Twinkies, then I would know Stanley ate Twinkies, but that's not the case. An adjective is used to explain a noun when it needs to be explained. You need not say, look at the black car, when there is only one car to look at, and he or she knows what black is. Black would be useful to omit other cars if other cars existed, or because the other person has no idea what black is, which, everyone knows what the color black is for the most part. You need not say, do you have 5 fiat dollars? When the other person is in knowledge of fiat, for they would know it is fiat by just saying $5. If the other person has no idea what fiat is, then maybe you need to say it. The whole point of me saying this part in here is because the adjective to explain dollars is never ever used, and people don't understand it, thus it is in need. Now let's go back to the charts. And let's start off within the gold to silver ratio. Okay, we're going to get into gold after this. We're going to get into silver. Gold has been outperforming silver for quite a while now. We can see here it's moved from the 50 mark up to about 61, so over 20% higher. But what is interesting within this particular chart, we have the key highs here from the 2008 lows of silver and gold, and then the 2011 highs of silver. And since that time frame, you had test 1 of a 61.8%, test 2, and now we're at test number 3, stating it's possible now. You can say that this move is becoming more and more of a failure. And I'm not going to show the more long-term chart. I have in previous videos, but it's very much a choppy chart to say the least, but it's a pattern I think that is worth looking at. Also within this running average, which is a very good indicator, I believe, as well, from a particular high or low. There's resistance on it here, the big fall down, you resisted it here, you resisted it here. Now it's breaking above this average, finding support at it, and starting to flatten out. That hasn't broken the trend yet. For when I want to see confirmation of Fibonacci, I need to see it hold and stay above a key level for a significant amount of time. But the chart action is showing that it very easily may come and maybe test the mid to high 60s as a possibility. Okay, let's move on now to the gold charts on the daily time frame. We are looking at this. The highs is the 1796 highs from last October. And of course, the lows, which have been placed in at 1322, right in here. What has occurred within this rally is this 18 average has transitioned to be sideways, and it is having resistance test and holding support of the 1450, even 1460 area, trying to get above this key resistance. Now, what we're going to do now is adjust it from this breakdown high to this low. And to do this, we're going to use the 5-hour time frame. So here's a 5-hour time frame, this high and this low. You had a little bit of stabilization on the first 38.2% level. And now what we're seeing here is, well, how many tests have we had of resistance? We had a couple in here, and again in here. The 18 average, of course, is going sideways above and below it right now. But if you end up breaking above this, same thing as I'm saying on the gold to silver ratio, what you need to do is you need to break above it and then find a pattern of holding this area as support rather of that in resistance. Let's continue on now. Let's go to the weekly term time frame. This is a key high and this is a key low. So therefore, the 23.6 level, 1444. It's above that, and it did find support on that this last week. The 38.2% level, which matches this low, and for the most part, these two lows as well, happens to be 1525, which would be an area I'd be looking to not only make a run towards to, but then establish some sort of resistance. Breaking past that is a 61.8% level, which would be, I can do that. It would be right here. This is a 61.8, around 1670. Okay, that's the weekly term time frame. Now let's go on to the monthly chart. And within this, we, for the first time on this, have had a situation where it has really been staying below the 18 average of closes for a significant amount of time. This is the third consecutive month that has stayed below it, and quite frankly, even the fourth. But still nothing to be concerned about, I would believe. Now, within this move here, what could this mean? Looking at this chart blindly, then maybe you would be a little bit concerned, but it's also something to point out that a couple of things may be occurring. One, a change in direction and a start, keyword start, of a bear market. Or B, this is that classic big failed breakdown before the big move, which is a very common thing. If you just want to look at, like, say, hundreds of random charts and look for, before the rally starts or even before the sell-off starts, was there any move showing a failed break of support for the rally or a failed break of resistance for the sell-off? And you will find many of those. Don't know yet if that's the case, but we'll be talking about supply and demand within both gold and silver within this video, so let's start a little bit of it now. If you've been watching the Drudder channel, the Drudder Divergence, and his research within the actual real physical commodities and how they're breaking records, that tells you that buyers are in control of the real physical asset. The prices of these are all in US fiat debt notes, and they are decided what the numbers are based on the paper game, as people call it. Maybe the digital game might be more modern, but it says that it's not the real price of gold and silver. Yet there's a very common trait amongst all gold and silver sellers, is they will sell their metal a little more than what they are told is the price, which is right now $1470.44. I find that very interesting, to say the least. Let's move on to silver, and before we get to the regular charts, I want to show a more long-term look at this again, which is showing this long sideways consolidation. It's been going sideways in a range of about $4.50 for the last 40 plus years, interestingly enough. Now, you can look at the cup and handle formation. Quite frankly, if it just rallies from here, that wouldn't be much of a handle in my book. To me, a cup and handle would be the next key level of support. For right now, I'd be looking at key levels. We have Fibonacci upside for this 4 and 8 range. Those levels are 1047, 1447, 20.94, $20.94, which is the next price. Then you got 31.42 up in here, 48.36, and then 75 there. So anyway, that $20 is a key significant support level, and as is 19. So that's the next level. But if we break through that and test into here, then that would give us maybe that cup and handle. Could it happen? Maybe. Will it happen? You know, I'm going to say I doubt it. Okay, let's move on to the other charts, or some other ones. Look at the daily chart. In the daily chart for silver, or gold, excuse me, it's testing the 38.2 level. Well, silver's only testing the 23.6 level. Its 18 average of this in here is still declining. And now let's look at it just like we did with silver, or gold, I should say, from here to here, which is the 5-hour chart. Let's bring it up. Okay, so we got the 23.6 in here. We got the 38.2 here. Gold, of course, is testing its 61.8. Silver's only testing the 38.2%. And what's interesting is it's had a lot of interesting movements within Fibonacci, because after breaking this resistance here, stabilizing within this mark, coming back down exactly to this level, resisting it here, coming back up, and it's been a lot of tests within this area. So where would the 61.8% level be? I did this with the other chart. The distance from here to here is the exact same from here to wherever the Fibonacci happens to be. So therefore, the 61.8% level would be roughly around 25 and change, 25.75. That would be the 61.8% level and the next target on further breakouts. Let's move this on to the, I'm not going to show the weekly time frame, I'm going to show the 7-day instead. Reason, because I want this high in here, which is the high from the, obviously the 2011 high. It's now been over 2 years, because that happened at the very end of April of 2011. So now we've already finished the very end of 2013 April. So it's been over 2 years now. And one thing I like to talk about within this weekly time frame, which is the case for all charts, is you get buyers that have a turn and then sellers have a turn, and it's like a game where everyone takes a turn and they do what they can do. So the buyers had a huge turn. Yeah, maybe the sellers had a short one here. And from that point on, you go boom, 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 boom. And it's just so simple. So right now, the seller's last turn was from, of course, here. Thus far right now, it is in here. Now, what I was saying before, after it had from here to here, that it would be very hard to make a higher high, which it obviously didn't. What it needed to do was make the higher low. It tried here and it failed. Tried here again and it failed. And well, obviously, because it failed on those two occasions, it not only tested this previous 26 low, it broke it through. I'd be looking for that area to be a resistance mark now. I also talk about the running average from the $50 high, how it had a chance to get above it here and failed. Resisted it here, resisted it here. There will be another test again at some point. Now, when I talked about before, when we were in this range of 26 to 50, that what you'd be waiting for is either a move down to the low 20s. Now, whether you got in here or not, that depends. Maybe you waited for lower prices, you didn't get it. That could be very much understandable. Or a confirmed breakout above this second Fibonacci level, which back then was like 34 and 38. But because the low has been adjusted from 2610 to 2201, the 61.8% level is now set at 36.46. So before I said I need to see a clear breakout above 38, now I need to see a clear breakout of 36.5. And before I was saying really 40, now I'll say 38. As new lows make the confirmation just a little bit lower. Final chart will be, before the indicator that is, will be the monthly chart. And within this, you got this running average, which is from this low here. It's in its first test as well. And possibly a key level in here, 1665. Really, that's the lower end of the range of about where we are now, 22, 23. As far as where we would go on a break, of course, below this key level. Now, the indicator that I've been using doesn't have a name to it. See, nouns, like I said earlier, are important. So we're looking at it. No, I didn't give it a name. It does. I got the no name indicator, but that's kind of already a trademark name, so maybe I shouldn't use that, but whatever. The level is negative 0.556 right now, which means anytime it's below zero, it is oversold. It has been oversold every minute of the day since the start of February. So for every single day, it's been oversold. Now, how this works, or how, I can't say how it works, I created it. But if you're looking to use this indicator for buying and selling, what I have found within silver, the best way of doing it is to buy when it hits negative 0.8. Then if it next goes to 1.6, you buy again. And you also, so the next time you bought here, so you wouldn't buy again until it goes down to negative 2.4, if it even does. Normally, you would be selling at 0.8 positive, 1.6 positive, at 2.4 positive. But if you go down here, I'd be selling the next time that it comes above here. So let's assume that it does. You sell a bit of silver. At that point there, you'd be selling again here, or you would be buying in here. Let's just assume that it goes to here. You sell in the positives, then it goes to 0.8. You would sell again. At that point there, you would sell at 1.6, or you would buy on a clear break below the zero. So that's one way of doing it, but it does show that if you're looking to buy cheap, you want it below the zero line. And if you're buying well above the zero line, there's very much risk involved where you could easily get in at cheaper prices. So right now it is still deeply depressed. In fact, it is just as oversold as it was in here, and it's just as oversold as it was back in here. So this will be it for today's video. I would like to thank you for tuning in and have yourself a magnificent week. Bye-bye.